Where in the world have all the government loans gone? Seriously, minimum FICO scores on government loans are going through the roof. 620, 640, lots of people going to 640 right now. I've heard 680, even rumors of lenders going to 700 minimum FICO score on their FHA and VA transactions. What in the world is going on here? Yeah, what's going on with all these government FICO scores? Oh, lack of servicing liquidity. Not this lack of liquidity thing again. What in the world does that mean this time? Today we find out. So come on, come with me. Let's learn. Seriously, let's go. This is the way.
This is the way.
Let's say that our buddies Dinjarin and his adorable little business partner open up Mando Mortgage Servicing. They service mortgage loans. They do this by purchasing the servicing rights from groups of investors, or these investors who own the mortgage loans pay them a fee to service the loans for them. Now, not everybody uses a mortgage servicing company, but a lot of people do. Sometimes the owners of the loans, the investors themselves, big mortgage banks and big companies, sometimes they service the loans themselves. But a lot of the times they're using a mortgage servicing companies to do that for them. So after they take on the loans and start servicing them, they are the ones getting paid a fee to service that loan and take the money from our borrowers. We have conventional borrowers, FHA borrowers, VA borrowers, all of which curiously bought the exact same house with the exact same shrub in front of it. Kind of strange, but we can look past that here. These conventional FHA and VA borrowers all go to work. That's right, they all go to work, and at work they make money. And the money goes from their work to them. They make their money at work so they can give their money for their mortgage payments to our buddies over here at Mando Mortgage Servicing. Mando Mortgage Servicing then takes all of the money that they get from taking those payments, they take their fee, and they pay it to the owner of the loan. Now, these investors, they typically really like government loans, the FHA and VA stuff, because there's some extra security there for them. Now, Ginny Mae says that on FHA and VA loans, no matter if these borrowers make their payments or not, this servicing company always has to pay the principal and interest payment to the investor. So if these people start to default, they have to come out of pocket. Not only are they not getting the money from the borrowers, but they're having to pay the money to the investors. How do you think that makes this little guy feel? That's right, we don't like him feeling that way. Neither does anybody else, because these companies are kind of what's causing this credit crunch on government loans right now. You see, this down here, this work, this employment, this is what's changing. This is at risk. All of the government shutdowns, all of the stay-at-home orders, all this coronavirus stuff means that work is not becoming quite as common as it used to be. And there's a lot more borrowers who are unemployed. If they aren't going here, then work isn't giving them money. And if they're not getting money from here, then they don't have money to give here. And if they aren't receiving money from here, and they still have to give money to here, then what do you think they're going to want to do? They're not going to want to service these loans anymore. Now, don't get me wrong. Conventional loans, it's still tough. If these people don't pay Mando Mortgage Servicing, that's not good. He's still not going to feel great. However, at least they're just getting hit the once. Yeah, they're not getting the money. They're not getting that payment. But on these loans, not only are they not getting that payment, but then they have to come out of pocket for that entire payment again. So it's kind of like they're getting double dipped here. Getting hit twice does not make our friend happy. And we want to make our friend happy. Well, whether it's the investor who's servicing the loan or a servicing company who's purchasing the servicing rights, because employment is in question these days, these are not looking as good to these people, so they're not being purchased on the secondary market. To mitigate that risk, they're saying, you know what? You're just going to have to give us higher quality borrowers and lower risk loans if we're going to continue doing this for you, because we're sick of coming out of pocket for these payments that we're not getting. If they keep having to do that and give that money to these investors, they're going to be really happy, but they're going to be out of business, and they don't want that to happen. That's why the liquidity on the secondary market is freezing up for these government loans, and that's why we're seeing government FICO scores go through the roof. So there you go. It's pretty easy. It's pretty easy to see why government minimum FICO scores have been going up. So there you go. It's pretty easy to see why government minimum FICO scores have been going up and up and up over the last week or two. I don't look for it to stop anytime soon. Things seem to be settling in around a pretty normal 640 FICO minimum. Some companies are still going down to 620. A lot are for their retail divisions. For wholesale and correspondent stuff, depending on the lender, you're usually seeing 640. A lot of the times that's not even being handled in the guidelines. They're just hitting the pricing a crazy amount for FICO scores below that. So the pricing results don't even show up in whatever engine you're using. But 640 to 680 is kind of where we're seeing people land right now. I don't know how long this is going to last. It's definitely due to servicing companies. The servicing companies don't want to get double dinged on these loans. Not only would they not be receiving the money from the borrower, but they'd still have to pay that money out to the investor. It's not a good position that they're put in with unemployment about to go up as high as some people speculate that it's going to go up. Thanks a lot for joining me, guys. We'll talk to you next time.
This is the way.